Everybody on the internet will tell you how great passive income is. Make money while you sleep. Who doesn't want that? But the part that you're missing, and the part that nobody on the internet will tell you, is that the only way that you can get passive income is by getting active income first and then investing that. Passive income is a byproduct of your active income that gets invested. When you get the active income, the passive income part is not that difficult. You can throw your money into dividend-paying ETFs or dividend-paying stocks or go out and buy some real estate. If you do these things and you manage it the right way, you can start generating this quote-unquote passive income. And yeah, there's a little bit of a learning curve there, but that all could be learned on how to actually put your money to work. But the part that so many people don't understand and that so many people miss is that you need this. You need the active income in order to generate any sort of passive income. Because what so many people are looking for is, I'm broke, I don't have much money, how can I make money from nothing without putting in any work? And that's not how it works. If you really want to generate true passive income, or cash flow as I like to call it, you have to start generating money first. And then you take this money and you use it to buy an asset. What asset? Dividend-paying stocks, dividend-paying ETFs, cash flow producing real estate. You go out and buy these things that will then pay you for owning them. But how do you buy these things? You got to have money in the first place. So in order to really understand this quote-unquote passive income, you have to start by understanding how to generate more active income. So I want to start today's video by going over how you can get more active income, and then go over how you can then use that money to buy this passive income, because you got to have the active income first. Now there's two general ways that you can generate this active income. Number one is by you working in somebody else's company, or number two is you working in your own company. In both situations, you are an employee. Everybody who says if you go start your own business, you're no longer an employee. Yes, you are. You're just an employee of your own business. Now maybe if you can scale your business up, you can hire a new CEO and you don't have to work there anymore. Now you just get the profits. But if you're working in your business and you're getting paid a paycheck, you are an employee, even if it's your own business. So now, what do you do with the salary that you make? Well, you can take some of this salary and you can spend some of it, you can invest some of it, and you can save some of it. The way that you can generate your passive income here is by taking some of this money that you put aside for your investments. Again, whether you are an employer or an employee, is you take some of this money that you put aside for your investments and you can use this money to buy cash flow producing assets. You take this money, you go buy some real estate that pays for rent. You take this money and you go out and buy some cash flow producing real estate. You buy some dividend paying stocks, you buy some dividend paying ETFs. Now, the mistake that so many people make here is they go out and they spend all their money and then they say, well, how do I generate passive income? I have no money to invest. How do I find a system that can pay me without doing anything? It doesn't work like that. You can't spend all of your money and then wonder how you're going to become wealthy. You got to stop making everybody else rich first. That way you can make yourself rich. And that means you got to stop spending all of your money. Okay, so you don't spend all of your money. Now what's next? Well, this is where things get a little bit tricky, because on one hand, you want to start investing for passive income. And so if you start just taking all of your extra money and you invest it for passive income today, now you're going to start generating a little bit of passive income. However, the second thing that you can do is take this money and invest it for more active income. For example, AI, not artificial intelligence, active income. If you are an employer, if you created your own company and you work a salary in this company, your business makes $500,000. Amazing. Well, you could take all that $500,000 and you could spend it on a new car, which isn't going to give you any return, or you can take that $500,000 and go out and buy some real estate. Now, that real estate or these stocks, they might pay you 3, 5, 7% a year in cash flow, but that's kind of where it's going to end. I mean, you're not going to get 55% cash flow on that $500,000 that you invest. Sure, you were able to make more money because you had your own business, or maybe you're a high-paid employee, but what if now, instead of going for that cash flow, that passive income right now, you took that money and you invested it for more active income? If you're an employee, maybe you take that money that you're making and you invest it into learning a new skill. You invest it into learning how to get a career change. You invest it into getting a certificate. You invest it into some business idea that way you can earn more money. Or if you're an employer, you take the money that you're making and instead of going out and buying real estate, which is better than going out and buying a car, what if you take that money and you invest it back into your business? Now maybe you can turn that $500,000 into $5 million. Now you have the ability to invest for more cash flow, because that $5 million is going to buy you more cash flow than $500,000 will, just like $500,000 will buy you more cash flow than $5,000 will. And this is where now you have to start asking the question of, what do you want with their cash flow? And the answer for the majority of people is, I want to have cash flow coming in passively that pays for my lifestyle. That's what it means to be financially free. And so now, if we just do the math, if you want to generate enough cash flow to live your lifestyle, how much cash flow do you need? Let's assume that you need $50,000 a year of cash flow. You need $50,000 a year coming in passively without you having to do any work in order for you to be financially free. Well, if your cash, if your investments can generate, let's just say 5% a year in cash flow, how much money do you need invested in order to generate this $50,000 a year? If you can get a 5% cash flow, whether it's from your stocks or your real estate, that means you have to invest $1 million in order to generate $50,000 a year. Now, where do you get this $1 million? This has to come from your active income. So now, how can you get this $1 million sooner? Well, you can keep investing a little bit of money every single month, year after year after year, which is a good plan for a lot of people. Or you can also start investing this money into your own income. That means investing in classes, reading books, investing in coaching, investing in whatever to help you increase your income. Now, again, if you are your own boss, if you are an employer and you have your own business, well, now you could take this money and invest it back into your business. This was a kind of a question and something that I had to go through as well, because in the early stages of my entrepreneurial career, I was doing whatever I could to make some money, whether it was hosting parties because I got started on my entrepreneurial journey in the event planning industry, or whether it was wholesaling real estate and selling real estate and doing e-commerce. When I was doing all of this, the only thing that I did was I made money and then I used this money to buy real estate. Now that was good because I was able to build up a portfolio of real estate that was paying me with this passive-ish cash flow. But as I started to grow, I started to realize that there might be a better option with the money that I'm investing. Because yeah, I'm buying real estate, which is good. I like the cash flow that I'm getting for real estate. But what if I could 10x how much money that I had to invest in the real estate? And the only way for me to do that was to increase my active income. And that's when I started to figure out and start to study and start to learn of different ways for me to invest my money into more of an active income, how I can grow my active income. That way I would have more money to invest. And that was what kind of inspired me to start building out Briefs Media, which you might have heard me talk about over the last number of years. But Briefs Media was then a way for now me to invest more of my money. That way I can grow the active income. That way then I have more money to ultimately invest in things like real estate and everything else, and to build a company that serves a bigger purpose. Now, of course, the company has to serve a purpose in order to be valuable. But this is where now the question is, what is the best option for you? And the reason why I'm talking to you about it like this is because I remember I talked about this before, but I met this young guy in the gym, 21, 22 years old. Young guy, hustler, talking about how he wants to build passive income and how his goal is just to have enough passive income to live his life financially free, but at the same time, he's an entrepreneur. And so my question was, well, instead of taking that little bit of money that you have every single month and buying this cash flow, what if you use that to 10x your income, to take your income from $100,000 a year to $1 million a year or $10 million a year? Then what? You're going to have way more ability to have that cash to actually go out and invest into what you're thinking is the passive cash flow. Now, the reason why I don't keep calling it passive cash flow, passive income, is because there is always some element of management involved. I own real estate. I own cash flow producing stocks. There's still some management involved with my real estate. I have regular meetings with my property management companies to review the financials, to review how the numbers are looking. And if there's changes that got to be made, we'll make those changes. I don't go and have to deal with the tenants. I don't have to go and fix the toilets when they get clogged, but I'm still overseeing the operations. It's the same thing with stocks. I don't have to go and pick the stocks because I'm investing in a lot of dividend paying funds, but I still oversee them. I look at the returns and I make sure things are okay. So it's not operating them. It's not even like a daily management. It's more like overseeing it, which is why it's not completely passive. That's why I prefer to call it cash flow. But this is where now, again, you got to understand, what's more important to you right now? Is it just getting a little bit of cash flow, or is it increasing your income? That way you have more income to get the cash flow. Now, once you answer that question for yourself, the question is, well, what's the best place for you to generate that cash flow? And this is where I do want to let you know that my team at Briefs Media has this amazing ebook titled How to Build Wealth as an Investor, that walks you through things like how do you build the mindset of an investor, to how do you save your first couple $1,000s, to how do you invest for cash flow. This ebook goes over multiple different strategies that you can use for that. It also goes over how you can spend your money smartly, earn money smartly, and protect your assets. This ebook is completely free. So if you'd like a copy of this ebook, all you got to do is click the link down in the description below. So once you understand the active income side, the question is now, how do you convert this active income into more of a passive income? And again, this goes back to the risk versus reward. At the very lowest end, what is the easiest and most accessible way for you to generate some sort of return on the cash, on this money that you've generated? And this would be through things like high interest savings accounts. At the time of me recording this video, you have high interest savings accounts that are paying 4 to 5% in interest. That means you take the money that you have, you throw it into one of these savings accounts, and you're generating 4 to 5% a year in interest. Your money has grown by 4 to 5% by doing nothing except sitting there. Now, the difference between a high interest savings account and something like buying an asset, stocks, or real estate, is that you don't own an asset. I mean, your asset really here is just the cash. The cash is losing value, and to kind of combat the losing value, you have the interest. Versus buying an asset, something like stocks and real estate, the goal is to see long-term growth. Now, does this mean that you're always going to see growth in your asset? No. You see market crashes, you see economic recessions, and so there will be times where asset prices go down. But the goal is to buy it for the cash flow. That way, whether the market's up or down, you continue to generate your cash flow. And over the long term, you want to see appreciation, meaning growth in the value of the asset. But the primary purpose is to generate that cash flow. So your high interest savings accounts, which you want to make sure it's FDIC insured, can give you a very accessible way to start generating some cash flow. I like to look at these as a way to park my cash, as a way to park my money until I can find an actual asset that I want to own. So now, where are the other places where you can invest your money? Well, I've been talking about this throughout the video. You have things like stocks, and then you have things like real estate. Now, the right option for you is going to be what's best for you. I have both stocks and real estate. I like investing in both. But you got to figure out what is going to be the better investment option for you. When you invest in stocks, it's very accessible. You can go out and invest in individual dividend-paying companies. You can invest in dividend-paying ETFs. You can invest in dividend-paying index funds. The whole idea here is you're going out and investing in something that is paying you with cash flow. But the thing that I want you to be aware of, especially when you're investing in stocks, is do not invest in anything, whether it's a stock or a fund, primarily based off of an analysis that shows you how much cash flow you're generating. Because if a company, let's just say, is trading for $50 a share and it's paying out a $5 annual dividend, that's going to show you a $5 cash flow a year. Now, that's a 10% annual cash flow return, which looks great. 10% cash flow, who wouldn't want that? Well, this doesn't show you the whole picture. Maybe the stock was trading at $250 not that long ago. And now, because it's on the verge of bankruptcy, its share price has been slashed. And so this is where you want to dig a little bit deeper. When you invest for cash flow, remember, you're not just buying the cash flow, although you want to make your decision making sure that you're generating enough cash flow, but you are buying the asset, and you want to make sure that the underlying asset is strong because you're buying a business, you're buying an asset, you're not just buying the cash flow. Now, of course, when you're buying this asset, you want to make sure that your cash flow is strong, but you have to do the analysis to understand that the cash flow that you're generating isn't something that's on the verge of bankruptcy. Because if it is, then you would lose all the money that you invested and the cash flow. So one way is stocks, and if you don't want to invest in individual companies, that's okay. You can invest in funds that will lower some of your risk and give you the ability to generate some of the cash flow. Generally, when you invest in funds, your cash flow is going to be a little bit lower because the risk is a little bit lower, but you have more protection. Now remember, the way that you win here is you keep consistently investing your money. And this is where, again, you can make the decision of how much money you want to invest in the cash flow today versus the active income. And you got to find the right balance for you. For me in the beginning, it was all buying the cash flow. Now it's more of a balance. And you got to find what is the right balance for you. Same thing with real estate. Real estate works the same way. Real estate is a great wealth building tool. It's a great wealth storage tool. But the thing that so many people get confused is they think that they're going to become wealthy because they own real estate. When in reality is you got to kind of build that wealth first. You got to make that money first, then use that money to go out and buy real estate. And this is where people get caught up into the things like no money down real estate investing. No money down real estate investing has made me a lot of money, but not because of the way that you think. It has made me a lot of money because people will go into no money down real estate investing, get in over their head, get into foreclosure, and then be forced to sell by all other lenders. And that's where the lenders come to people like me and sell me that property at a discounted price. And so this is where now that financial education is important to understand. Now, if you want to go out and invest in real estate, that's great. But there's risks involved. And not that you should let the risks stop you from wanting to do it, but that you have to understand the risks, be willing to learn, be willing to invest in your financial education, and again, make smart investment decisions. Make sure that you understand the type of cash flow that this property will produce And is it enough cash flow? You see a lot of people that will go into real estate get excited because they think, oh yeah, maybe this property doesn't pay a lot of cash flow, but it's going to double in value in just a few years, so I'm going to be able to sell it for a huge profit. What if it doesn't? What if you can't sell it? And now what if you lose a tenant? What if a tenant damages the property? Now you're paying out of pocket on a property that isn't the value that you thought. And if it loses value, well then now not only can you not generate any income, but you can't even sell, you can't refinance, and you get very stuck. And this is where now again, you got to understand your investing goals. But when it comes to cash flow, when it comes to the passive income, you need the active income in order to get the passive income. So before you put all your focus on how do I generate passive income without doing anything, without having any money, you got to have the active income first. Most people think that the way you get rich is by buying real estate. You've probably heard the phrase, more millionaires are made in real estate than anything else. But that's not true. You don't get rich by buying real estate. And in this video, I'm going to show you the real reasons why rich people buy real estate and why you can use the same strategies that they do. Growing up, I had no idea